the investment giving you the highest returns is actually making you less money. Do you want to know why this happens? And this is the mistake which cost a lot of lakhs and thousands of money, which keeps on going. You want to know the reason, right? Hi, this is Anirudh Bellare here. Welcome to the 65th video of your best financial life series. See, today's video, with the aspect of you clicking on this title because of the thumbnail, which was saying most investors forget this. Now, what do usual investors forget? That is, any retail public or anyone who actually invests in the stock market. And remember, disclaimer, this is not any financial advice over here, neither it is an investment advice. Please consult your own financial advisor before doing any investments, okay? This is a very disclaimer line I'm telling you, but what am I trying to tell here? What is that one thing which ensures that you enter the right investment zone with that kind of mindset? You will be learning that in today's video. And see, if you stay till the end of the video, you will understand something which is even more golden, which I can tell you at the start of the video as well. You want to know that, right? That is why I'm here. Okay, so the first and most important point, as I've written over here, savings is the gap between your ego and income. Now, what is the meaning of this? Savings is the gap between your ego and income. This usually means that whatever salary you get, the portion which you save, that is the difference between what you are actually willing to pay on from the income you have. In simple terms, usually not a lot of people actually are able to do their savings. You know why? Because once salary increases, once every lifestyle increases, how will it happen? Because your brain will want more. See, for example, as I've been telling you, let's take a corporate employee named Shyam. Okay, so this is Shyam. Now with Shyam, what happens is he is earning a salary of say 1 lakh rupees a month. Now what is 1 lakh rupees in dollars? Is nothing but $1,000, right? In terms of Indian rupees, I'm telling. Let's say $1,000 per month. So this understood, it is per month. Now what happens over here? Initially, when Shyam keeps on working, he likes his company, he likes everyone. But then he feels that, you know what, I feel I'm done with this company. I just need to move on from this company because my opportunities are a little bit restricted here and I need to move ahead. And listen, this is a very important point to note. I know it's a bit different from your investment, but I'll get to the point. Now Shyam is like, he wants to go to a different company. Now what happens? Obviously, when he gets an offer letter from a different company, because he wants to switch, his salary can easily pump up to say like a 1,40,000 rupees or $1,400, right? Which is like a 40% increase. Now what happens usually with such increases is that the human brain, it gets a lot of excitement that, oh my God, I'm going to a new company. Shyam's going to a new company. I'm so excited. He's very excited. But when he actually goes there, he comes to know for the amount he's getting paid on a monthly basis, the value he has to give is more. Right? Important point over here. The value he has to give to the company is more. But now what happens, because of his earning of this much amount of money, he feels like spending more. He feels like, who is going to even do any savings or any investment? I am earning so much amount of money. Neither am I married right now. Let me live my life. I want to enjoy my life. As a result, what happens? He forgets the part of your saving. And that is where the first mistake starts. Now see, I am no kind of person to tell what you're doing is right or wrong. Okay? Now whatever my friend Shyam is doing, let him do. Happy for him. As long as he succeeds in his life, I don't need anything more than that. I'm very happy for him. But if you see from a lens of a 23-year-old person over here, that is me right now, who's explaining this video, I feel that if Shyam can keep a portion of savings, it will be eventually better for his unforeseen circumstances. Now, getting to the point of investments over here, what is that investment that returns and amount you invest and all of that? What is that one golden question which I asked you? Investors forget the most important thing, right? Jumping to that point, savings was that bonus which I was telling you. Jumping to that point of what investors should usually focus on, because see, a lot of people, they focus on, tell me the fund name, which stock should I invest, how much percentage can I make on an annual basis. But these people fail to understand the ideology behind doing so, because remember, when you invest in any kind of stock market or anything, there is usually a lot of unpredictability, right? With life or with any friend as well, there is unpredictability. If you don't know what is going to happen, that friend may tell you that, I'm sorry, I cannot keep any friendship with you. Like, say, for example, with Shyam, exact same thing. You cannot have any expectation from your investments, but you can keep only one thing, which is in your hand. Remember the time when before you used to write your exam, you used to study everything which could come for the exam. And in reality, what used to happen? The question paper itself was completely out of the box, completely different. As a result, what happens? You may feel that whatever I studied and what are they asking? Two different things. The same thing in investments. When you invest, if you go with a mindset that I know what type of fund, business, stock, whatever it is, I know what I am investing in. I am very clear that this is what could happen in the future. With that kind of thought, I am consistently putting my money on a weekly basis, monthly basis, or whatever basis. And then what happens? See, for anyone who actually has got this grit of having the patience, because see, as I mentioned, in today's day, using social media and many other things, it's very easy to get excited from one thing. Like, say, Shyam, very important example. Shyam jumped from one job to the other, got a 40% hike. 3 years down the line, he jumps to another company, he gets more income. Okay, that's a very good thing for him. I'm very proud for him. But as a result, what happens? Your brain will keep wanting more and more. Like, say, for example, you drive whatever car right now, say a nice branded car. After a point of time, you will feel like buying that more better car, right? Because it's a human need and want to show in the society or to keep yourself happy. It happens, it's a normal thing. But the point over here is your expectation, because the answer to the question of what you saw on my title was, what are these most investors doing wrong, right? What should you focus on? The answer is focus on no expectation. Now, what is this no expectation? As I've told, you have done how much ever research from your financial advisor or from wherever. You have come, you know, you are going to put, like, say, for example, $1,000. What is $1,000? 1 lakh rupees. You know that there is this 2, 3, 4, 5 businesses or funds which you actually have high scope in future that they could do well with whatever research you have done, whatever questions you have studied for the exam. You go with an analysis that something similar could happen. Same with investments. Study everything with that thought that there could be a better outcome in future. That's it. You keep investing, and slowly, with a time of 5 years, 6 years, 7 years, eventually your graph will behave this way. Like, say your graph starts over here, goes slowly, 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 and there will be a point where the curve will take off. Like, you have seen how a flight, that is an aeroplane, goes, right? It doesn't immediately take off like this. It goes slowly like this after it gets its momentum. the speed at which it's running, there will be a point when that slow takeoff happens and then it goes up, right? The same thing with this curve of compounding. Now, for you to actually get this in your life is a game of train the brain, train your mindset. And for you to get that type of mindset, it will happen with persistence, my friend. Like say example, Shyam Shyam has a small child named Gagan. Okay. Now Gagan, he is 1 year old. Now if Shyam, he wants to feel that, oh, Gagan is just 1 year old, I want Gagan to be 20 years old. Now 19 years later is a very big period of time by the time Gagan grows, right? But for Gagan to grow from age 1 to age 19, that stretch will eventually be there. At a point, adolescence will come. At a point, he'll become 18 plus. There are so many stages, right? The same thing with your investments. You cannot have any type of, there's always uncertainty. You keep doing what you trust and ensure that there will be a time that this graph will eventually do well, because the companies you have chosen could be the best, right? So the point over here is you focus on 1, 2 or 3 things in terms of your consistency of the amount of money you put. Like I say, $1,000 or your 1 lakh rupees. You keep doing that, and wait for that aeroplane effect to happen, which is nothing but your compounding effect. For you to wait for all of this takes a very long time, right? And more importantly than this, I've kept on mentioning a fact over here. The biggest asset you have as a human being is to compound your own skill set. Now, how will you do that? If say you have a business, you're earning a lot from your business, but still you feel that, you need to actually grow your mindset to another level. You go to a job just like Shyam, and you feel that with remaining time, I feel I need to upskill myself, because the jump on the next salary to the next one, the company will only take me if I can show them my experienced value at some level. So increasing that amount of money will become important. As I've written over here, how much should be greater than how well. Now what is the meaning of this? How much is nothing but how much amount of money you put. Like say example, now let's leave Shyam alone. Let's go with my best friend Raju over here. Now Raju says, despite his salary, keeps one portion for his investments, and every 6 months he knows that the amount of money which goes on in his investments will automatically increase by 35%. Like say example, 10,000 rupees he's put it for his investments. Now what is 10,000 rupees on 35%? I might be wrong, but it could be around 3,500, right? More. So 13,500, or see, pardon me if, or 3,900, whatever. Pardon me if the amount is wrong extremely. But the point over here is you have options whereby you keep increasing that amount of money, whereby it keeps going in your investment account. That's why I mentioned how much of your amount you can put, while ensuring that your future needs are met and your present needs are met. You ensure that an extra amount of money can go for your investments. Better, right? Because every small money which compounds on itself will eventually give you a larger effect. Like how I said, when Gagan, he'll grow with time. It happens. That is why how much is a better answer than how well. Now, the example I've given over here, like if somebody puts, this is not kilometer per hour, okay? This is like 20,000 rupees. What is 20,000 rupees? Is nothing but $200, right? $200 per month on 15 years basis with 13% of interest. Like you have principal, rate and time. That is your simple effect, compound effect, that formula. Not exact formula, but an ideology over here. after inflation, you have an amount of say 1 crore. Now, say 1 crore might be extremely small in the next 15 years, right? But if you do the exact same thing with lesser returns, this is what is called how well is nothing but your percentage returns, which is not in your hand. The exam paper is not in your hand, but for you to actually read and go for that exam paper, that is the amount of money which you put is in your hand. So remember that. So the amount has increased in this part, which is how much, and in the same 15 years, the control is in your hand with the amount of money. You could make easily little more amount of money than this. Now the ideology over here is that when your amount increases slightly on a month on month basis, your percentage gap will get compensated for lower returns. Because if the money amount you put is higher and the returns you get is comparatively lower, what happens? Even if this is 1 crore and this is 1 crore 60 lakhs or whatever amount of rupees, that 60 lakhs difference is also a big amount, right? It's not any small amount. So the motive over here is that you need to understand how you can actually upskill yourself. Now see, this is no promotion and all. You say you have any particular type of hobby which you can make as a secondary or tertiary source of income as well, whereby say for example you can leverage out some value or service by either freelancing or whatever you do. How do you make time for this? It's all about personal interest, okay? Because personal interest, if it's there, that's when something will come out. Like say for example, I love to play the sport badminton, okay? Personally I'm telling you, I love to play the sport badminton. Now say right now I'm working and I feel that okay, I need to, I can play some competitions of badminton and earn more. Good. As long as you have any monetary source, which is one part of the equation, but the main output is that you are playing the sport you love and you are winning out of that. What else happiness will you require out of that, right? And that can give you one type of a small maybe additional source of income, which is like very exciting at times. Now what say a 4,000 rupees cash back is nothing but $40. A big amount, right? How much ever you can say $5 or $50, very less, which is 5,000, 50,000. It's actually a lot of amount, right? Isn't it true? That is why I'm saying your percentage returns is not controllable. If you focus on the controllables, important, if you focus on the controllables and leave the expectation part, and then if you receive something, that is the biggest boost for your mindset, my friend. Because if you keep expecting something from the other person or expecting more money, then and if it doesn't meet your expectations, you can eventually feel sad, depressed and all that. Why all of that? When you know that you are doing something extremely consistent by auto debiting from your account, and say the same thing, I follow as well. Now see, I might be investing comparatively less because right now I am still a 3-year-old adult. I'm considering 20 years as an adult plus 3 years old. I'm 23, right? So this is a kind of a better learning and a mindset to keep, whereby you have time, you have the money, and interest will eventually be got. And I missed this point over here. Now see, whenever you invest in anything which can give you money, right, there are two sides of the coin. One side is your money can do well, another side it could not do well. Especially talking about this concept where you have your markets, investments involved, subject to market risk. There could be times because of uncertainty or wars or any type of lockdown or whatever, because of which your money can fluctuate on a big basis. So keeping all this in mind, actually seeing your money fall and all that, different emotions play, right? Because remember, your brain is entitled to keep you safe. And for you to earn that hard-earned money and actually see that grow and to see that fall, it's very difficult for any human. That's why I say, if you have consistency with you, little by little, that's what James Clear has mentioned in his book Atomic Habits, whereby you do one thing, one thing, one thing, and by the end of 365th day, your that one small habit or action of yours would have extremely gone up to a very great level. Like say, if you would have clicked on this video, you would have seen a beautiful thumbnail, right? But for me to actually make that thumbnail, you would have not seen the 7 months of effort which I've gone through, which is what a lot of people don't see. That is all happening because of my 365th day formula. Now, what is 365 divided by 2, which is somewhere around 182.5, right? So 182 days, I could reach this amount of a beautiful thumbnail. Now, just if I even try imagining, after 180 days, my thumbnail could become more better, my video could be more better. So that's how you grow. Same thing with investments. Slowly, slowly you start off, slowly you will start getting minute results, which will eventually lead to your upward curve. Just as an aeroplane example as well. So thank you so much for watching this video till the end. As I mentioned, that reward thing which you will be getting is, I gave you in the start your quote over here, which is savings is the gap between your ego and income, and the example of Shyam and his son Gagan and Raju as well. These are just examples. What else can I give you as a gift? Please let me know in the comment section. And once again, I really value and respect your time. I hope you did get a lot of value after watching this video. Because remember, awareness is something which not a lot of people give in videos, and I feel I could be one of the good people or best people to give all of this, and that is why I'm giving this. And remember, I'm not any financial advisor. Please consider one before taking any investment decision. Thank you so much for your precious time.